how can you help your son, daughter, or your grandchild purchase their first home?
Let's start with you got a kid graduating from high school. They're heading into college. We got the Family Opportunity Loan, which allows you to buy a home for your child in college with little as 5% down. It's a great way. Your kid's not going to have to rent.
So wait a minute. So if my kid goes away to college, let's say they're in Missouri State and they're in Springfield, and you're like, hey, the renting an apartment, that's pretty costly. There's an alternative?
There sure is.
I could buy like a condo or something, and then I could help buy a condo for my kid.
You can buy it, and it's not considered as rental property. It goes under this family opportunity. Little as 5% down. They rent in there, maybe get a roommate or two. Your asset is appreciating. They've got their housing settled, and voila.
So you can keep the payment leveled out, right?
That's the
benefit of buying is that somebody can't mess around with the rent cost, right? And then you're building equity at the same time. So what you're saying is, I don't need 20% down like I'm an investor, and I don't have to pay high investor rates.
Yes.
Right?
Yeah,
I get a homeowner occupant rate, which is always lower.
Right. And that program also works if you have a special needs child that's an adult, and to help them get in a house, or when we're talking about kids, but an aging parent.
Does that
matter? Of course, in a way that parents can help is helping with the down payment. That's the big hurdle. That's the hurdle. We talk about down payment assistance. Well, giving your kids a gift of 3% down, 3.5% for an FHA, 5% down, whatever, to help them get.
Oh, wait a minute. So I don't need 20%.
No, you don't need 20%.
Woo! No. All right.
And the parents can give the money to the thing. Now, it's going to come with some rules. We're going to have a form that says this is a gift, and they do not have to pay it out, pay it back. It's going to be signed by all parties.
They can pay it back, but they don't have to pay it back.
And then we're going to know the parent's ability to give. And that differs with loan to loan. On the government stuff, they're going to see a bank statement from the parents.
Okay.
And on the conventional, we just got to have the.
It's okay.
Yes,
it's fine. See your bank statement.
Right. We see plenty of bank statements. That's no really big deal.
Right. Okay. That's sometimes the hurdle. Now, as a grandparent, you can do this.
A grandparent can do this. A grandparent
or our parent can do this.
Mm-hmm.
Right. So as far as gifting goes, can another near relative do it?
Yes.
When you're just gifting.
It says close relative, or an FHA even allows a friend, but a conventional, they want it to be a relative.
A friend can do it.
On FHAs. Yeah.
Okay.
Let's just say the parent wants to help out, and but they don't want to give the money, they want to loan the money to do it.
Okay.
So is that possible? It's possible. We have to qualify with that loan payment, so we have to set up a payment, and it has to be a secured loan. So typically when we're using the loan this is when the children, they've got a house that they're in, they're buying another one non-contingent. They've got plenty of equity. The parents are going to give them a bridge loan to bridge the difference. That's fine, but we have to file a note and a deed of trust against the existing property.
And basically the collateral is going to be their existing home.
Yes.
What if I'm a parent who wants to loan all the money to my kid when they're buying? Like, I want to be the bank. Can I do that?
Of course you can, yeah. I mean, that's more you're buying a real estate. It's no different than buying anything else. Now, if you want to be prudent, you should probably get an attorney to draw up a deed of trust and a note.
And
so
the
that's
promissory
secured.
note.
Right.
And secured against a house.
Right.
If you're going to loan all the money to your child to buy and you are going to be the bank, you can't just gift them the money. Okay, so there are a lot of gifting rules. I think it's 17, 18 grand per child right now. And if you're like, well, I'll do a loan, a deed of trust and a promissory note, but I'll just charge them 0 or 1%. Guess what? Can't do that either. You can, but the government's like, hey, if you don't do the rate that we set out, if we don't use, which I think is around 3.5 or 4%, it kind of rolls between there right now, that if you don't do the interest rate that we set every month, in the month that you're gifting that loan, you're going to have to pay taxes on what you should have made off of that loan. Believe it or not, the government does not want you giving a bunch of money to your kids without them getting a piece of it. Yeah. That's just the way they are, right? So the gifting, if you do want to gift, though, you can gift per spouse. So as a parent, I could gift my son, I think it's 18 grand. I could gift my daughter-in-law 18 grand. I could gift my grandchild 18 grand. And then my husband can do the same thing. He can give 18 to the son, 18 to the daughter-in-law, 18 to the...
So I would say...
Right? So you can do a gift of a sizable amount per person, per spouse.
And this is changing, so I would say, we both say, contact an accountant first. Yeah. And talk to them to make sure that we're up with that. But definitely it can be done.
Mm-hmm.
So another thing that we see a lot of right now is what we call a gift of equity. So let's say I'm a parent and I'm moving. I'm going to be selling my house.
Okay.
I've got plenty of equity that my son, daughter, grandchild, whatever relative wants to buy that house from me.
All right.
So instead of discounting the price, I can say I'm going to sell it to you at this price, and I'm going to give you that equity in between.
Is having a will, the way to leave your home to your heirs?
Before we get started, when we're talking about this, how we leave our possessions out, we need to stress that we get into this legal morass. Always important to talk to an attorney.
Now, if there's only one of you left on title
Right.
and you pass, is having a will enough?
Well, I'd say it's almost better than having nothing, because
Well, it's better than having
Right, so
nothing.
what
But
happens-
does it transfer the house? How does the house get from you to your children with a
Right.
will?
no, because then the judge has either 12 or 18 months for creditors to come in. It has to sit and wait. Somebody, if there's a mortgage,
So
somebody has to make that
wills
payment.
don't pass title.
Right.
They don't pass title on a car or a house. Wills do not pass title. Wills just tell the world and a judge, really, what your wishes
And
were.
I think in 2024, most people don't have a will. They have a trust. They have a trust
so
agreement
there's only two ways to stay out of probate
that we know of.
that we know of. There's a couple ways to stay out of
Right.
probate. When it comes to homes, if you have a will, that's great, but it doesn't keep your heirs out of probate. They would actually call an attorney. The first thing we do is you got to talk to an attorney and open probate. You open a probate case with the probate court, and then the judge decides who the executor is going to be for the estate, and they give you letters of testamentary that says you are the executor. It's usually
This
only
takes
one
time.
person. Sometimes there's two. It takes a little bit of time. You got to document everything in the house, all the personal possessions, all the cars and everything. So if you don't have either a trust or a deed on death, or beneficiary deed,
Yes.
or with a car, a TOD, a transfer on death, you can do those. If you don't have something like that, that's an instrument that actually transfers title, a will does not transfer title. So there are ways to stay out of probate court.
Right.
So
Trust
let's just
agreement?
say a trust agreement. So you can go to an attorney, have a trust drawn up, something happens to you, you name trustees that take the trust over, and you put the house. You have to transfer the title of the house into the trust. Having a trust doesn't convey title, so the house has to literally be titled in the trust. Now, you can also do a transfer on deed or a beneficiary deed. And the beneficiary deed is just it's a piece of paper that you file, has a description of the house. It says, hey, if something happens to me, it goes to this person or these persons. And you can name as many people as you would like. And then title would automatically transfer that person by them supplying a death certificate, recording the death certificate. They would record it, and then the title would now be in the heir's name, and you would avoid
But you got to be
all
careful.
of probate.
It doesn't avoid it all completely, because and I just went through this. So let's just say that the lone survivor, the parent, passes away, and he had a beneficiary deed to his two daughters.
Mm-hmm.
Okay, they own the house, but Missouri is a community property state.
Well, that's
so
something we haven't gotten to
their
yet.
husbands
That's right.
own the other. So then it's
How
all
about
four of
that,
them.
y'all? So
You have to
Missouri is a marital state,
Right,
which
community
means
property.
that anything that you own, your spouse automatically has 50% interest in. So even if you got transferred, even if it's in a will, okay. Now, if it's in a trust, that's different.
Right.
Trust is different. If it's in a trust, you call an attorney. This is why you need to talk to an attorney about
Definitely.
these things. Having a will is not
And
enough.
again, we're speaking from our experience.
Yeah.
I keep throwing the disclaimer.
Talk
You really
to
do
an
need to talk
attorney.
to an attorney.
Here's another one. The other one is power of attorney. People say to me, well, I have a power of attorney. Power of attorney is only good while somebody's alive, by
Right.
the way.
Yes.
So if you have the power of attorney, that's great. So you can handle affairs for your loved one. But once they pass, power of attorneys are no good.
Yeah,
So
these
wills
aren't-
and power of attorneys don't really do that much.
These don't have to be sad and morbid conversations.
No,
but
it's just something you have to prepare for
Yes.
because life is miserable enough when you pass for your heirs, right? For your loved
Yes,
ones.
it'd be very-
And then you can make it even harder for them to have to go through probate court. And
Right.
there's another thing that happens in probate. they have to keep that open for so long, so many months, to allow creditors to come and make claims against the estate. Not just creditors, but other people. So you also leave your heirs open to a lot of risk that money may disappear from your estate and does not get passed down because somebody came in and made a claim and the judge said, okay.
So be proactive.
Yes.
Always talk to an attorney.
Yes.
And if you do find yourself in a situation where you've inherited a property, get in touch with somebody that can point you in the right direction.
Right.
Can give you good guidance.
Yep.
Yeah.
And the record the beneficiary deeds. You can get them. Give us a call. We will definitely point you to the right attorney for trust, for beneficiary deeds, for probate, whatever it is you need. Get to a good attorney.
Communicate, and if there is a mortgage, communicate with that lender.
Communicate.
Keep paying on the mortgage because you want to trigger any kind of foreclosure or anything like that.